We are going to go through this problem 3-5A. And for the sake of time, when we make entries in our journal, the next thing that we're supposed to do is put those entries in our T account. For the sake of time, I already have the T accounts filled out and I already have the worksheet filled out. Okay. So when we make an entry in our journal, if what you did is not the same as what we do together right now, make sure that not only do you adjust your journal, but go ahead and adjust your T account as well, right? So if you made a mistake, you realize it as we're going through it, fix your mistake in the journal, but also fix your mistake in the T account. Once we work through all the journal entries, I will put up the T account tab so that you can see what the solution looks like. But I didn't want to have to toggle back and forth. I was trying to be efficient in creating the T accounts and the worksheet. But I will show them to you after we finish all the entries so that you can compare yours to mine and see if you have any issues that you need answered, okay? But we're starting with the journals. In the month of April, we had a bunch of transactions that we have to account for in our journal. I'm just going to ask for volunteers. If I don't get volunteers, I'm going to start calling on people. And I want new volunteers. I don't want the same people volunteering every time to do these entries in our journal. So April 1st, we received cash and we received computer equipment. In exchange, we gave an investor common stock. Someone raise their hand and let me know, what am I putting in my journal for that transaction? Tyler. Okay. Okay. And again, for the sake of time, I'm abbreviating, but you get the picture. Okay. So cash and equipment, assets increasing. That's why they are debits. Common stock represents our ownership now out in the investor's hand. Always increases equity. That's why it's a credit. And then you would go ahead and put that in your T account, right? Any questions on this one? April 1st. Someone different than Tyler, raise their hand. The company rented furnished office space by paying $1,800 cash for the first month's rent. Andrew. Yep. Cash, $1,800 credit. Prepaid rent, $1,800 debit. And I mentioned to a few of you as you were asking questions about this, the book just wanted you to report that as rent expense right off the bat. Because, right, you could do prepaid rent and then you would just have to adjust it at the end of the month. And the book's like, don't do that. Just make it rent expense. I don't like that because that's not what I taught you, right? What I taught you is that if you pay for something ahead of using it, that needs to be an asset on your accounting records until you use it. So you'll see that there's going to be a final adjustment. They gave you A through E. There's going to be one more that we do to transfer that prepaid rent into rent expense. So you'll see that when we get to the adjustments. Okay. Any questions on this? Notice also that in the first transaction, we put debit before credit. The second transaction, we put credit before debit. I don't care what you do. As long as your account names are correct and the amounts are in the right column, I am not going to be picky about that on a quiz or on your midterm exam. Okay. Connect is a little pickier. Connect wants you to put the debit before the credit. So just be aware of that, but you don't have to worry about that kind of stuff for your quizzes and exams. All right. Number 3, the company purchased $1,000 of office supplies for cash. Trace.
Office supplies, 1,000 debit, cash.
Office supplies is an asset. It's increasing. That's why it's a debit. Cash is an asset, but it's decreasing. That's why it's a credit of 1,000. Any questions on April 3rd? And then again, you would take that information and update your T account. What about April 10th? The company paid $2,400 cash for the premium on a 12-month insurance policy. Josh. Okay. Josh, what kind of account is prepaid insurance? It's an asset. It is something that we have paid for in advance of actually getting use out of it, right? Same as prepaid rent. So we show that asset until we actually use it. Now, I want to point out, because a few of you asked, when we get down to the adjustments, it's going to tell us you used $133 of insurance this month, right? And the reason why it's not a nice rounded number is because we bought the insurance on April 10th and we didn't start actually getting coverage until April 11th, which means we would have to break down our insurance per day, okay? I am not going to make you do that. For this quiz, you are going to be expected to break down per month. So for a quiz question, it may say you purchased insurance on April 1st, and then you have to make an adjustment for it on April 30th. It'll be a nice round number of a full month, okay? Keep that in mind. But in this example, again, they give us the number, so we don't even have to worry about it. Okay, so that was April 10th. Any questions on April 10th? What about the 14th? The company paid $1,600 cash for 2 weeks of salaries that have already been worked by those employees. So earned by employees means for us, the business, because remember, we're not accounting for the employees, we're accounting for the business. If it says that those employees have already earned that money, that means that we have incurred the expense of them working for us. We have incurred the expense of them working for us because we're looking at it from the business's point of view. What am I going to do in my journal on April 14th? Tim. Perfect. Debit salaries expense, credit cash. Everybody cool on April 14th? Any questions? What about the 24th? The company collected $8,000 cash for work that they did, commissions earned. So we did work, we earned a commission, right? Our business earned a commission. Isaac. Cash, commission, revenue, because I changed the name because I didn't like commissions earned.
$1,000 debit.
Always increasing equity. So it's a credit, right? Any questions about April 24th? What about the 28th? This looks familiar. The company paid $1,600 cash for 2 weeks of salary earned by employees. We just did that, right? Tim, what did you have us do on April 14th? Salaries, expense, and cash. Same thing happened. Don't reinvent the wheel, right? We're going to debit salaries, expense. Oops. Salaries, expense. We're going to credit cash again for the $1,600 that the employees have earned that. That's an expense for our business, right? As those people work, we incur the expense of their salaries. Salaries expense. Any questions on April 28th? What about the 29th? The company paid $350 cash for minor repairs to the computer equipment. This isn't one that we talked about in previous examples, but we know that we've paid cash for lots of different things. We know how to do that in our journal. And if we think about what happened, right? We did some repairs to our computer equipment. We can use this green box of account names to kind of give us a hint on what we should do. So April 29th, someone raise their hand and tell me, what am I doing in my journal on April 29th? Cooper.
There's expense.
right? So again, we didn't do one exactly like that in our previous examples, but you know how to account for a payment of cash. You know what that means. Cash is going to be your credit. And then you can look at your chart of accounts and think, which one makes the most sense for me to use when I have repaired some of my computer equipment, right? Repairs expense. You incurred the expense of having that equipment repaired. Everybody cool on that one? The 29th. Okay, the first transaction that happened on the 30th, the company paid $750 cash for this month's telephone bill. So the month of April has already gone by. We've been using our telephones the whole time, and now we got a bill that we're going to pay for on April 30th. Someone raise their hand and tell me, what am I doing in my journal for that transaction? I stand between you and the weekend. You can do it. Raise your hand. Jordan. Right? In our examples, we did have transactions like that, but we just called it utilities expense most of the time, right? Any sort of utility that comes in, we would just call it utilities expense. They want to be more specific in their accounting records and call it telephone expense. Great. Use the account name that they give you, right? Any questions on that first April 30th transaction? Then finally, on April 30th, the final April 30th, the company paid $1,500 cash for dividends. For dividends. What am I doing in my last entry here on April 30th? Tyler. Yep. Remember, dividends is its own thing, right? We don't have to make up an account name for it. A dividend is a dividend, and that's it. Dividends always decrease equity. That's why it's going to be a debit in our journal. Do you have any questions about the entries? Again, on this next quiz, you're not going to be asked to make these kinds of entries. You're going to be asked to make these adjustments, which we're going to get to here in a second. But on the midterm, you're going to see a problem that looks just like this. Here's the month. Make the entries into your accounting journal. Okay? Any questions? Bless you. When you have entered all of those entries from your journal to your T account, this is what your T accounts should look like. Okay, so again, I'm going to leave this up here for a second while I ramble on and talk to you about the process that you go through with the T accounts. You essentially are taking the same information, the chronological list of everything that happened in April, and you're just moving it into a different format. That's all you're doing, okay? But once you've moved it into these T accounts, you then can use the information to calculate what's the ending balance. After I've made all those transactions in my journal in April, what do I have left in cash, in commission revenue, in salaries expense, etc.? The process that you go through is to take the total of your debit column and the total of your credit column and figure out what the difference is between the two, right? So for cash, if I take the total of the debit column, I get 38,000. If I take the total of the credit column, I get 11,000. The difference between the two is a debit of $27,000. Okay? Some of them are nice and easy, right? Computer equipment, common stock, prepaid rent, office supplies, they only had one entry. That's the balance. That's it. Okay? I will put this solution in Moodle too, if you don't have time to sort of catch up on any mistakes that you have made. But for now, does anybody have any questions about the T accounts? After you calculate each of those balances in your T accounts, you would include those balances in the first set of columns called your unadjusted trial balance. So we are ignoring the right-hand columns for now, and we are focused only on our unadjusted balances. And again, all we're doing is taking the balance that we already calculated and putting it into this new format. That's it. Okay, so each account has an ending balance, and here it is. Does anybody have any questions about this first trial balance that we are going to make? Again, it's just taking whatever you calculated in the T account and putting it over here in the worksheet. That's it. Okay, because now I think is the part that is new for chapter 3, right? Everything that we just talked about, we already did in chapters 1 and 2, right? Identifying transactions, analyzing them, putting them in our journal, updating our T accounts. We did all that stuff. But in chapter 3, we learned about this new process called adjustments, right? And so we have to look at the end of the month and see, is there any accounting information that needs to be adjusted based on what we know? In this problem, they tell you that there are 5 adjustments that need to be made, A through E, but then I also told you that there's one more. There's a 6th adjustment that we're going to make related to that prepaid rent account. So we'll get to that in a second. But let's start with this first adjustment here. Adjustment number A says, letter A, Jordan, don't laugh at me. Adjustment letter A says that we have prepaid insurance of $133 that has expired. When you see expired, that means used. We used it, right? And if you think back, right, what happened is on April 10th, we bought an insurance policy. So what they're saying is from April 11th through April 30th, you used $133 of insurance, right? I mentioned to you, I will not make you do daily calculations like that. I'll give you a nice clean month. But when they give you the amount, just say thank you. You don't have to try to recalculate it yourself. Just say thank you and put it in your adjustment. Okay, so $133 of insurance has been used. Someone raise their hand and tell me, what am I going to include in my journal for adjustment A? Isaac. Okay.
Give us the number already.
Yep.
Insurance is gonna be a credit.
We are using our asset. When you use your asset, make it go down, right? The value of our prepaid insurance should decrease. Why? Because we're using it, right? And when we use it, we have to show that we have that additional expense, insurance expense, okay? And so after you made this adjustment in your journal, you would go ahead and update your worksheet. Here is our worksheet, and here are my adjustments. Insurance expense is my debit, 133, and then you see the credit made to prepaid insurance in the middle set of columns. So for the adjustments, remember I said skip the T accounts. Don't worry about the T accounts for your adjustments. Just go ahead and stick them right in those middle columns of your worksheet. Okay, a debit to insurance expense, a credit to prepaid insurance. Any question on that first adjustment? Okay. What about adjustment letter B? At the end of the month, $600 of office supplies are still there. $600 of office supplies are still there. Now, we got a little bit of work to do, right? Because we have to make the adjustment for how much of our office supplies we used, right, Dee? So we can use the information that we have, though, to figure that out. What information do we have that can help us figure out how much of our supplies we used? Go ahead, Isaac.
You have the total you had in the beginning and
Here is my total, $1,000. That's how much I started with. So over here on the side, 1,000. That's my starting point. I know that I have 600 left over. So this is my starting amount. This is my ending amount. If you know what you started with and you know what you ended with, The difference is what you used, right? So I can take plus the $1,000, subtract the 600, and that gives me $400. So now I know what my adjustment amount needs to be. Yeah.
Do you expect this,
So a simple calculation like that I know you could probably just do in your head, no. More complicated where you have to maybe divide, multiply, that I want to see your methodology, yes. Okay, so now we know the amount. What are the account names we have to use for adjustment B? Cooper.
So it's gonna be.
And the amount is $400, right? Our office supplies expense, which always decreases equity. We have more of it now, but it always decreases equity as our debit. Office supplies, we have 400 less, right? Because we use them. And then again, we would go and put that into our worksheet, right? In those middle columns, you would have a debit on the office supplies expense side, and you would have a credit on the office supplies, okay? Any questions on B? Letter C, this month's depreciation on the computer equipment is $500. How nice of them to give it to you. You know who's not going to be nice? Me. You should be able to calculate depreciation. Okay. We use that straight line calculation in chapter 3, where you take the asset's value, you subtract salvage value, and then you divide it by its useful life. So you should remember that calculation. But remember, on the quiz, you can use your notes. You can use your notes. You can use Excel. You can use PowerPoint. You can use Connect. What's the one thing you can't use? Each other. Don't use each other. Okay. But they were nice. They just gave you the amount. They said it's $500. So we have to make an adjustment for the depreciation of the computer equipment. What accounts make the most sense, Jimmy and Hal, to use for this adjustment? The one that has depreciation in it. Absolutely. And there's actually 2 of them, right? Because we know for an asset like computer equipment or a building or an automobile or the chairs and desks you're sitting in, for those assets that we use for a long period of time, we're not going to touch the asset value. We're going to leave computer equipment alone. But in our accounting records, we still have to show that the value of that computer equipment is decreasing. We still have to show that somehow, but we're not allowed to use the computer equipment account. That's where we go. Accumulated depreciation. Do you remember what type of account accumulated depreciation is? It doesn't fit nice in there. What was it, Jordan? Contra asset. That means it's going to be linked to an asset. Which one? Computer equipment, right? It says so in the title. So we are going to use that contra asset account as well as depreciation expense, accumulated depreciation, computer equipment. And this one also had computer equipment. Depreciation expense, just like all the other expenses, always decreases equity. That's why it's our debit of 500. And accumulated depreciation is a contra asset. We want it to decrease the value of our asset. So that's why it's a credit in our journal. This was probably the most funky adjustment that we went through in chapter 3, because it was this weird account that doesn't fit nicely into this accounting equation that I've been beating you over the head with for the last 4 weeks, right? So it's just an additional element to our accounting process that we have to remember. Accumulated depreciation. Any questions about adjustment C? What about D? Employees earned $420 of unpaid and unrecorded salaries. So what they're saying is, for the first 2 weeks, April 1st through the 14th, we recorded salaries expense and we showed cash, right? Then the second 2 weeks, April 15th through the 28th, we again, salaries expense and cash. What they're now telling us is what did I say, the 28th? April 29th through April 30th, the people worked. They were out there working. And we owe them $420 for that work. So what account names do you think we're going to use for adjustment D? Tyler?
Salaries payable. And then.
The expense part of it is exactly the same as it was in those other transactions, right? Look, April 28th, debit salaries expense. April 14th, debit salaries expense. So when employees work for you, debit salaries expense, right? But on April 14th and the 28th, we actually paid them. In this adjustment, what we're saying is they're not going to get that money right now. So we have to show that we have a liability on our accounting records for $420. We have to pay them that amount, $420. Everybody cool? Adjustment D. Adjustment E. The company earned $1,750 of commissions that are not yet, we just didn't bill the customer yet. So we did the work, we just haven't gotten the money for that work. Trace. We do journal entries like that all the time, right? You perform a service for a customer, but they don't pay you. That's not really new in chapter 3. We've done that before, okay? And finally, not in the book, but what I'm asking you to do is to think back to that prepaid rent because we have to adjust for it. On April 2nd, sorry, we had prepaid rent, and that was for the month of April. But now the month of April is done, right? So what about that prepaid rent? What adjustment do we need to make to this prepaid rent amount at the end of the month? It's the last one. You can do it. Someone other than Isaac and Cooper and Tyler. Jordan. We want the whole thing to go away. We want the entire prepaid account to go down to 0. So we credit the prepaid account $1,800. That's not prepaid anymore because now it's rent expense. We used it up. Okay. So with the last 5 minutes of class, I just want to explain to you what we are going to do on Monday and remind you of a couple of deadlines that you have coming up. On Monday, I am going to start our class with this worksheet because I still want to walk through together with you how to make financial statements. Because again, on the quiz, I'm going to ask you to make a balance sheet. And we didn't do that yet. We didn't get to that yet. Okay. Well, we got to it in another example. We didn't get to it in this example. So I want to work through how to make the financial statements using this worksheet. That is what we will start with. Okay. Then we will finish up any slides that we have remaining in chapter 3. We will talk about the writing assignment that you're going to have a draft due next month. And then we will move on to an introduction of chapter 4. That's the plan for Monday. Everybody cool with that plan? Okay. On Monday, your chapter 3 Connect homework is due. Okay. We've gone through everything that you need for that homework assignment. We've gone through adjustments. We've gone through how to make an income statement, a balance sheet. We've done all of that. Okay. So you should be ready to tackle that homework. Chapter 3 quiz will be due by Wednesday. If you feel comfortable with chapter 3, with doing these adjustments, with making a balance sheet, go ahead and take the quiz, but you have until Wednesday, right? And you're going to use the Excel template and you're going to use our examples and your notes and everything. You're just not going to use each other for that quiz. Okay. We're all on the same page. Everybody good to go? Okay. I appreciate you and I will see you on Monday. Thank you.
Have a good weekend.
Thank you.